We're looking at shares of Alphabet, but really I want you to focus on its debt, because its bond offerings keep coming. And after the US dollar debt sale raised $20 billion yesterday, it was upsized. The company is now selling over $11 billion more in sterling and Swiss franc denominated bonds. And that super rare 100-year note we told you about yesterday, well, it was oversubscribed and then some, almost 10 times, according to sources. Let's talk about it with Robert Schiffman from Bloomberg Intelligence. In less than 24 hours, they've raised $32 billion, basically, on the debt markets. Let's just focus in on what that 100-year debt signals about the confidence people have in this company.
Well, I think what the bond market is telling us is that AI bubble talks are so 2025. That the concerns that, at least from the creditor's perspective, is not anything near what it is from an equity standpoint. The reality, though, is what is the benefit of a 100-year bond? To me, it's just a trophy. It's going to be put on the shelf of pension funds and insurance companies. They're going to hold it to maturity. And let me tell you something, if anyone's really worried, if that bond does not pay off in 100 years, come and look me up at Bloomberg. I'm going to be upstairs in my office eating free snacks.
Robert, the macro point is that they're doing interesting things with capital, the bigger picture to fund CapEx, right? To grow AI infrastructure at scale. I always read your memo every morning, and you revise constantly the kind of trajectory. What are the latest numbers that you see going over the next decade? Yeah,
it sort of becomes monopoly money, the type of spending that we're seeing. I mean, we're now projecting over $4 trillion of cumulative hyperscaler spend through 2030. You can afford a lot of that from operating cash flow. However, how do you supplement it? You supplement it with really cheap bonds. And the way that you can do that is you start off with balance sheets that are in phenomenal shape. You know, if you look at Alphabet's AA+ credit rating, S&P came out yesterday and said, in order to breach their downgrade trigger, they would have to issue more than $180 billion of incremental net debt. So what I would argue is, hey, if they wanted to be a BBB name, would they have to issue $1 trillion of bonds? There is so much capacity. Why not take the money down, borrow long-dated paper at 5.5%, 5.7%, put it to work today, and grow your future cash flows for another decade, if not 100 years.
There is some pushback in the market that, yes, it's a trophy on a pension fund's desk. Maybe it's a trophy on Alphabet's CFO and treasurer's desk if they sell 100-year bonds. But it also signals the top of the market. Look, we go back to when the last time a tech company did this. It was Motorola back in the 90s. And people are trying to make the assertion that maybe Motorola was at the peak of its game then, and where is it now? What do you say to those sorts of question marks about 100-year debt?
Yeah, listen, I think what's going to be the top? We can never call the top. Let me tell you something, though. I think there's more bonds to come. We still have Microsoft. We still have Meta. We still probably have Amazon.
But would they do 100 a year?
You know what? They might. And they also might do a lot of other incremental currencies like we talked about yesterday. I'm actually surprised they stayed out of the euro market. I think there's a big, deep demand. There is every portfolio manager that we are talking to is talking about having excess cash on hand. And everyone is looking at the same compressed yields. There is a bid for yield. It is not going away anytime soon. So if we hit the top of the market, I don't think it's today. Maybe it's next week. Maybe it's going to be in 3 weeks, but I don't think it's yet. Listen, I've never been as bullish on tech as I am today. I don't think these companies have ever been better positioned. I don't think their balance sheets have ever been better positioned. And I actually think the confidence levels that we see across the bond market far supersede what I think even Bloomberg News is talking about.
Robert Schiffman from Bloomberg Intelligence. Bonds are fun. Thank you very much.